Hi, thanks so much for joining in to this special budget coverage on NDTV Profit. We're running up to what is promising to be a very exciting event on the 1st of February, and we've got lots to talk about. My name is Alex Matthew, and with me is Mahima Vachrajani. Mahima, we're talking all about taxes that affect the individual today, right. And hopefully there's good news in the budget.
Hopefully, yes. I mean, it's been, a long time since all of us, a common man especially, has received a good news. So hopefully this budget should bring some joy in their lives.
Absolutely. So what we'll do over the course of the next half an hour is set some context for you and possibly also set you up for what the finance minister might announce in the budget. There could be quite a bit in the offing. To tell you about what the context is, of course, and to talk about some of these aspects, I'm joined today by Sameer Kanabar, who is tax partner at EY India, as well as Mayur Shah, who is also tax partner at EY India. Sameer, Mayur, thanks so much for taking the time. Mayur, I'll start with you right off the bat. The biggest change, if we can call it that, of Budget 2024, apart from some tinkering in the new tax regime, had to do with the change in the capital gains tax. Some might say a very dramatic change in the capital gains tax treatment. How do you think that that has been absorbed by investors?
See, to the way I look at it and the way I feel that, it has been absorbed very well by the people. Given that, the tax rate for long-term capital gain has gone down from 20 to 12.5%. I've seen a lot of companies which initially or individuals were planning for some tax planning avenues. They are saying it's okay, 12.5 is not a big number and we would be okay to go ahead with. So what we have seen is that the mindset of people is changing given the tax rate being there, and which I feel is lowest among developing countries as such. So it is being well received. Of course, initially, if you see the when the tax rate was and change in the capital gain tax system was announced, many had a lot of apprehension in terms of indexation benefit being going away, which then was restored, and choice is given to the taxpayer that choose whether indexation with 20% or 12.5% in respect of properties, and that too also certain kind of properties. So, to that extent, there is still a leeway which is available, a choice which is available with the taxpayer. So, to my mind, this has gone very well with the entire taxpayer community.
Right. Sameer, with respect to the slab rates, are you expecting any change? I believe, and the change will be in the new tax regime because the government kind of wants to, wants people to shift towards the new tax regime. That is one thing, and secondly, we did see an uptick in standard deduction in the past budget. For the new regime again, but do you expect that to, get more, interest going forward as well? Do you think that 75,000 mark will be raised?
So let me give it a different attempt to this whole perspective of slab rates, personal tax. If you look at the taxes paid by individuals as compared to corporate tax, if you try to make two different buckets, then essentially we have seen 20% growth in income tax being paid by the individuals. And obviously we have another statistics which is provided to us by CBDT, which also suggests that almost 63% of the tax filers, say we have around 7.5 crore tax filers on the personal tax side. 63% of that, or around 65% of that, have not paid any tax, and it is only the balance people who have paid the taxes. And then that has also enhanced the tax to 20%. So if we take this overall statistical data, and then if we look at the slab rates, I feel that most people, say 65% of the people, are off the tax payment. So they are within the minimum tax on which the tax outflow happens. And hence, if we make any further attempt to either increase the slab rates we'll have more people moving out from the tax payment, though they may continue to file return, but they may not be paying any taxes. So I'm not sure whether government would want to, from a statistical perspective, tinker. But given the current sentiments, given the the kind of growth that we are at around 6.5% or so, in order to leave more money in the hands of middlemen, government want to make some tinkering to see how much they can leave back with the common man or middleman or the middle class, so that they are able to spend more. And if there is more expenditure or more consumption, obviously the economy will get fueled. So from that perspective, yes, there could be something.
Uh, what I'm trying to get, Mayur, is whether or not there is a need, whether there is a need to give some benefit to people who are paying a bulk of the tax right now. Because what Samir just laid out is that so many people have actually not paid tax, have actually filed their returns, but because of the changes that have been made at the bottom end of the tax payment pyramid, a lot of people have not paid tax. But then you've still seen a 22.5% increase in non-corporate direct tax paid. You have more than half of the direct tax that is paid by individuals and not corporates. And wouldn't you say, therefore, that at the slightly higher end, there is a need to give some relief? Because in the old tax regime, that 10 lakh number has not changed for a decade and a half and more, right?
That's absolutely right, and the point which you made is absolutely correct. That tinkering is still needs to be done from two perspectives. As one rightly outlined by Samir, that currently there is a need for more money left with the taxpayer, so that it can really improve, make money available for consumption, and that can improve the economy as a whole. The second point which is there is that if you look at the inflation and as compared to the kind of money which is being available with the person is not enough. And when we compare with the rates in 81, 82, or for that matter, say in 2004 onwards, you will see the index number, the way it has grown, whether the basic threshold has grown or not. At the same time, government would like the days to be there, and therefore the way the tinkering can happen, it can only expand the slab rates to a larger thing, like say up till now up to 5 lakh, which will remain exempt, as opposed to 3 lakh. And from 5 lakh to then they may go to 10 or 15 lakhs as a next slab. So they will be widening the tax slabs rather than reducing the rate or tinkering anything with the rates. That's what I believe will happen in the budget, in the upcoming budget.
Is that what I was going to ask you, Mayur, is if you were to don the hat of the finance minister, it's not an easy hat to don. Because you have restrictions on one end and you have restrictions clearly on the other, because you have demands on the other, right? You have individuals that have been paying tax and saying, give me some relief. But on the other hand, you have to look at fiscal deficit, you have to look at the needs of the economy, the needs of the country. So if you were in that position, that is not necessarily the best position to be in. What, according to you, is the best possible solution to give everybody what they want?
Yeah, I think the most important part is widening the tax base. At the same time, tinkering something with the rate for HNIs. That is where you will be able to compensate something. But also the other challenge which we foresee is that a lot of entrepreneurs are emigrating from India to other countries, and therefore you have to deal with even that issue as well. So even if I try to decide that let's kind of put or some tax on the super rich personnel, becomes very, very difficult for me to maintain them within India in those situations. So therefore, I mean, the way I look at it is widening the tax base is the only way to manage it. And then seeing that, this loss arising on account of reduction in direct tax, how do I compensate through other mechanisms? And that's what one has to really look out for. But rather than increasing tax rate in any form for anyone.
I mean, that completely makes sense what you said, Mayur. Samir, I'll come to you. TDS, of course, is a very wide topic, but for a common man who's doing a 9-to-5 job, do you expect any kind of relief in any of the TDS sections that you have under income tax?
Before we do that, because everyone needs to understand
Tax
this.
deducted
So
at
tax
source.
deducted at source, but
Yeah.
in what specific capacity are you mentioning this, Mahima? Are you
Right.
talking about, so generally
Right.
this relates to people who are
Paying
receiving
rent,
or receiving interest income.
or are on contractual basis. All of these three categories are generally something that pertains to a common man who's doing a 9-to-5 job. Do you expect any kind of relief there?
So, and before I answer the question on TDS LX, to your point, on the higher bracket side, there are, while Mayur did address that, we also need to look at the situation where a lot of HNIs are moving to alternate jurisdictions for whatever reasons. But having said that, there are two important things which I think government should seriously consider, and I believe these are best practices from other countries as well. One is taxation of dividend income, right? And there is a theory to say, or a school of thought to say, that this is double taxation of the same income. When a company has paid tax on its profits, why should one pay tax on the dividend? So to the extent the dividend is going in the hands of individuals, uh, if at all we still agree with the school of thought that it should get taxed, and we don't agree with the Western school of thought that dividends should not be taxed, then at least can we lower the tax rate on the taxability of dividends, and sort of pass on that benefit to across the slabs. Again, dividend is earned by all sets of investors. It's not that it's only on the top bracket. And second part on the top bracket is that there is a huge surcharge, right? We had seen a couple of budget prior to see that the surcharge was actually reduced. Can we reduce this surcharge even further to whatever extent in this budget? So these are the two measures which I believe all the slab rate taxpayers would be looking at, and of course surcharge on the higher slab side as well.
Okay.
Coming to
I just want to make a point before that. I'm sorry I didn't offer the chance for you to become the finance minister as well, and I'm glad that you've taken the opportunity, Samir. Now on the TDS.
Coming back to TDS, I think TDS is on the two sides. One is on the corporate side, other is on the individual side. Today, the individuals have to deduct faces a TDS or a withholding tax on rental income, interest income, dividend income, and of course, if they are filing tax audit report, then obviously there are a lot of other withholding taxes also which they face, and they also have to do withholding tax, right? And at least what we hear in the corridors is that, as we saw the whole revamp of capital gains tax in the previous finance bill, there is likely to be a full revamp of the withholding tax provisions, because there are multiple sections for different streams of payments or income. Even if any payment doesn't result into income, it still becomes subject to TDS, even if because it is on the payment basis, right? So we are likely to see, and of course there are 1% TDS, there is 2%, there is 5%, there is 10%, there is 0.1%. So there are across, all sorts of percentages, and there's a lot of confusion, right? So we will be seeing a lot of rationalization, and there has to be a rationalization on the withholding tax, whether the withholding tax is to a corporate or to an individual, so that there is a complete harmony and there is no confusion as to at what rate the TDS has happened, on what sort of payment it has happened. So this is something that we would look at, and something similar to capital gains tax. We will see kind of, across the horizontals of all kinds of payments, we'll see a complete rationalization.
Which is a beneficial thing for everybody in terms of planning their finances, because really filling a lot of these forms tends to get a little tedious. TDS, see how that happened. Anyway, but the point is, a new tax regime, of course, is preferred. But the other talking point heading into this budget, gentlemen, is the possibility of a mention or the presentation of a new income tax bill to replace the age-old Income Tax Act. Samir, I'll come to you first. What are the key provisions, if anything, that would be expected in this, and anything dramatic?
So first of all, why do you need a new tax bill, right? India has already made a couple of attempts under the previous governments, whichever be the government, but those attempts were made. And then finally, the current government said that we are closing the new, the so-called legislative change or new legislation of Income Tax Act, which was known as Direct Tax Code, that was kind of shunted and the doors were sort of closed forever. They said we will not be getting it. Then we saw formation of VK Gupta committee, which was given kind of a mandate to come up with a report. And of course, that report is not in public, so we don't know. But obviously, public initially there were no public comments or interactions, but subsequently they agreed that we will have at least public comments, if not interactions, or stakeholder inputs in 500 words. Now, all this has been compiled, right? And sort of we assume that there will be a lot of changes suggested by the committee. Now, whether you bring those changes in the current legislation or whether you want to essentially bring in a new act, or you would want to do both, for short-term measure, because a new finance bill, it's not an easy task. It will be introduced, it will go to the standing committee. Standing committee will then will be headed by different parties. They'll interact with stakeholders. So it's a long drawn process. Maybe it may take a year or more, right? But there'll be a lot of short-term measures which may need immediate attention. And hence, some of those comments in those reports may see day of the light in the upcoming finance bill or the budget session on income tax side. And now we are hearing through various sources in media that there'll also be a new income tax bill that will get introduced, a new legislation. So now why do we need this, right? Is it going to reduce the tax rates? Is it going to make any revamp? To me, at least, the answer seems to be no, because whatever you want to do with taxes, you could still do it in the budget, you could do it in finance bill, and you can do it in multiple finance bills. You don't need a new income tax law for that.
Right.
The new income tax law is required essentially to say that there is a lot of confusion. One section will be running into multiple pages,
Right.
with subsections, provisions, etc. We
Right.
need to simplify, right? So the new income tax bill that we are likely to see, if at all we are likely to see, it will be more of simplification, and they'll be explaining certain aspects. And I'm assuming that they should explain some of the aspects by way of illustrations, examples, so that there is absolute clarity, right? That is why we would need, and if that is something that gets introduced, it would be a welcome.
Right. I think your work is going to get increased once the bill gets introduced, I'm sure, Samir. Mayur, I'll come to you. I was reading a recent report somewhere which said that the TDS process for NRI selling a property in India is kind of very tedious, So I believe that some changes could be made around that as well. Are you expecting any change there? Or if, you expect that, this change should be made, what are your views on that?
So as far as I understand, I don't think they're likely to make any changes on sale of immovable property. The difficulty which is being faced by the NRI when they are selling the property, because TDS needs to be done on the income portion. And when the sales proceeds are paid to the person, what is the real capital gain earned by the recipient of the proceeds? One doesn't know. And especially NRI may not be able to even capture that very well. And to that extent, that becomes a very, very challenging issue for the buyer as well as for the seller. That what is the right amount of TDS and what is the right amount of income on which TDS needs to be done. And that's where it finds a difficulty over there. And only what I can see is that they may come out with some procedural aspect which will simplify implementation of TDS in relation to NRI when they are selling the property. So that is what I expect from this, and my recommendation or my wish is that government should come out with some procedural aspect to bring more clarity when NRI is selling the property, what a buyer really needs to do, because a lot of unclarity is there today whether a certificate from CA will be suffice or one has to go and take a clearance certificate from the income tax officer on the value and on the income on which TDS needs to be done and at what rate it needs to be done.
Right. And any simplification expected in terms of payment of taxes when it comes to overseas, because that is also a very tedious process. But till now, there is no OTP system when it comes to, people who are staying outside paying taxes in India. Your suggestion or your view on that, Mayuresh? Mayur, sorry, my bad.
So on payment of taxes, especially for overseas people, I think more likely than not, they will simplify the process because many of them may not have even a bank account in India to make the payment of taxes. And therefore, either, some of them use some banking mechanism whereby they can directly remit money to the bank for payment of taxes. And probably they may notify such system and formalize that method whereby NRI without generating OTP can pay off the taxes, and that is what I expect this budget to cover that aspect.
Gentlemen, one last aspect. I think this is perhaps the first budget in a long time that we've not spoken about a potential raising of long-term capital gains tax at all. I don't think that this is an expectation from the market. But just a point on the securities transaction tax, because a lot of people commented on it when the data came out that we referred to at the start, which is over 70% increase in collections in the 10-month period, right? 10, 11-month period. Is there any possibility of that being changed at all, or will the government be happy with the kind of collections it is having? Because somebody said whether you make losses or gains in the equity market, the couple of people you have to pay, one is your broker and the other is the government.
So let me make an attempt to this. What I see that when any tax rates will be tinkered, at that point in time, they need to create some mechanism to recoup that loss which they would have suffered. And probably a minor increase can result into a major coverage from the loss which that has been suffered by the exchequer. So that is where I feel that there will be some increase in STT, which will kind of restore the loss which has been suffered on account of tinkering with the slabs or rates.
Okay, gentlemen, I think we've covered quite a few bases. And hopefully some of the suggestions that we've spoken about actually see the light of day and we have something to celebrate about on the 1st of February. I look forward to speaking to you about some of these very provisions when the budget is presented. Thank you so much for joining in.
Sure, thanks.
Thank you.
All right, now that brings us to the end of this particular budget special, but there's lots to talk about the budget in particular and beyond just taxes. Right. You'll find all of that right here on NDTV Profit. And of course, on D-Day, on Budget Day, you have to tune in live. It's going to be a market trading day, so we'll be up bright and early to bring you the latest updates. I'd encourage you to stay tuned to NDTV Profit.